Hey guys, today I'm excited to share with you a trading strategy that's both simple and incredibly powerful, yet surprisingly underutilized. We're going to delve into the adaptive moving average AMA strategy. In this video, we'll not only backtest this strategy together, but also walk through the code line by line. By the end, you'll be able to copy the code and run it yourself, empowering you to explore its potential in your own trading. Let's jump right into the heart of the matter. The AMA strategy. Kaufman's adaptive moving average was developed by American quantitative financial theorist Perry J. Kaufman in 1998. The technique began in 1972, but Kaufman officially presented it to the public much later through his book, Trading Systems and Methods. Unlike other moving averages, Kaufman's adaptive moving average accounts not only for price action, but also for market volatility. The adaptive moving average is a unique type of moving average that adjusts its sensitivity based on market volatility. Think of it as a smart thermostat for your trading. It knows when to heat things up and when to cool them down. During strong market trends, the AMA reacts quickly, allowing you to catch significant price movements. Conversely, in sideways or choppy markets, it slows down, helping to filter out noise and reduce false signals. One of the uses of Kaufman's adaptive moving average is to identify the general trend of current market price action. Basically, when the indicator line is moving lower, it indicates the existence of a downtrend. On the other hand, when the line is moving higher, it shows an uptrend. As compared to the simple moving average, the comma indicator is less likely to generate false signals that may cause a trader to incur losses. Kaufman's adaptive moving average can also be used to spot the beginning of new trends and pinpoint trend reversal points. Why is this strategy so powerful yet so underused? Many traders stick to traditional moving averages, which don't adapt to changing market conditions. The AMA's ability to adjust makes it a versatile tool in a trader's arsenal, but perhaps its complexity has kept it off the radar for many. Don't worry, by the end of this video, you'll see just how accessible and effective it can be. Alright, let's roll up our sleeves and dive into the code. I'll explain each part in detail. First things first, we need to import the necessary libraries, NumPy and Pandas for numerical operations and data manipulation, a library to fetch historical market data, matplotlib for plotting our results, and random for hyperparameter tuning. These libraries are essential for our backtesting framework. Next, we introduce the AMA backtest class. We're creating a class called AMA backtest to keep our code organized and reusable. In the init method, we set default parameters. The trading symbol we're using is BTC-USD, so we're trading Bitcoin against the US dollar. We specify the data period as 60 days, meaning we're fetching 60 days of historical data. The data interval is set to 5-minute intervals, providing us with detailed intraday data points. Our starting balance is set to $100 for simplicity, giving us a baseline to measure our performance. We also initialize variables to store our data, the equity curve, and performance metrics, like the end balance, total trades, profits, and losses. This setup ensures that we have all the necessary components in place to track and analyze our strategy's performance. Now we need to fetch the historical data for our chosen asset. This involves using a function to download the historical data based on the symbol, period, and interval we've specified. Once the data is fetched, we print out how many data points we've retrieved, giving us an idea of the dataset we're working with. With our data in hand, we move on to calculating the adaptive moving average. Let's unpack this step by step. We start by extracting the closing prices from our data, which will be the basis for our calculations. We then calculate the direction, which is the absolute price change over a given window. This helps us understand the overall movement of the price over that period. Next, we calculate the volatility, which is the sum of absolute price changes over each bar in that window. This gives us insight into how much the price fluctuates within the window, regardless of direction. The efficiency ratio, ER, is then computed by dividing the direction by the volatility. It measures the efficiency of the price movement. A value closer to 1 indicates a strong, efficient trend, while a value closer to 0 indicates a choppy, sideways market. We define our fast EMA and slow EMA constants based on the parameters we've set for the fast and slow EMAs. The smoothing constant, SC, is calculated using the efficiency ratio and these EMA constants. It determines how responsive the AMA is to price changes. A higher smoothing constant means the AMA will react more quickly to price movements. We initialize a list to hold the AMA values, starting with missing values and setting the first calculable AMA value. Then, we loop through the data to compute the AMA for each point, updating it based on the smoothing constant and the price difference. By the end of this method, we have a new column in our data containing the adaptive moving average values. Now, with the AMA calculated, we can proceed to backtest our strategy. Here's what's happening in this phase. We initialize our trading variables, setting up our starting balance, position status, and entry price. We then iterate through each row of our data. If the AMA value is missing for a particular data point, we skip that iteration. If we're in a position, we calculate the unrealized profit or loss based on the current price and update our equity curve accordingly. This gives us a real-time view of how our trade is performing. We check if we should exit our position based on our strategy rules. For example, if we're in a long position and the price drops below the AMA, it's time to sell. Upon exiting a position, we calculate the realized profit or loss, update our balance, and reset our position variables. We also update our performance metrics like total trades, total profit, and total loss. This helps us keep track of how many trades we've made and how successful they've been. If we're not in a position, we check if we should enter one based on the price crossing above or below the AMA. For instance, if the price crosses above the AMA, we might decide to enter a long position. At the end of the data, if we're still in a position, we close it out to realize any remaining profit or loss. This backtesting method simulates trading by following the AMA signals, allowing us to see how our strategy would have performed over the historical data. It's like taking our strategy for a test drive to see how it handles different market conditions. To optimize our strategy, we implement hyperparameter tuning. In this process, we set up variables to track the best parameters and performance. We run a loop for a specified number of iterations, and in each iteration, we randomly select values for the window, fast EMA, and slow EMA within reasonable ranges. We print out the parameters being tested and run a backtest using these parameters, recording the end capital. If the performance with the current parameters is better than our current best, we update our best parameters. After the loop, we print out the best parameters and their performance. We store these best parameters for use in our final backtest. Next, we evaluate our performance metrics. Here, we're calculating key performance indicators that give us a comprehensive view of how our strategy performed. We look at the equity curve, which shows the progression of our account balance over time. We calculate daily returns, which are the percentage changes in our equity curve on a daily basis. This helps us understand the consistency of our returns. We compute the average daily return and volatility, which we use to calculate the Sharpe Ratio. The Sharpe Ratio measures the risk-adjusted return of our strategy, giving us insight into how much return we're getting for each unit of risk taken. We also calculate the Max Drawdown, which is the largest peak-to-trough decline in our equity curve. This metric is crucial for understanding the potential downside risk of our strategy. The annual return is calculated to see how our strategy would perform over a year, and the Calmar Ratio is computed by dividing the annual return by the Max Drawdown. This ratio assesses performance relative to risk, helping us gauge whether the returns justify the risks taken. The profit factor is calculated by dividing the total profit by the total loss, indicating overall profitability. These metrics give us a well-rounded understanding of our strategy's performance, not just in terms of profit, but also considering risk and consistency. We also want to visualize our performance by plotting the equity curve. This involves creating a graph that displays the ups and downs of our account balance over time. A visual representation can quickly convey how our strategy performed throughout the testing period, making it easier to spot trends and patterns. Finally, we run the entire backtest. In this process, we fetch the historical data we'll use for testing, perform hyperparameter tuning to find the best parameters, and run the backtest using these optimized parameters. We then calculate performance metrics and plot the equity curve to assess our strategy's effectiveness comprehensively. At the end of the script, we instantiate the AMA backtest class and call the run method. This brings all the components together, allowing us to execute the entire backtesting process with a single command. Now let's run this and see what we have got. As you can see, it is printing all the parameters and giving us the ending balance. Based on the results from the hyperparameter tuning and final backtest, the performance of the comma strategy bot looks both promising and robust. The optimal parameters identified were a window of 4, fast EMA of 2, and slow EMA of 15. These settings achieved the highest end capital, suggesting that this combination allows the bot to capture the subtle nuances of price movements effectively while filtering out market noise. Starting with an initial balance, the bot achieved an end balance of $149.46, representing a profit of about 49.5% over the testing period. The annual return of 5.19% may not seem astronomical, but reflects a steady and sustainable approach, well suited to traders who prioritize stability over high-risk gains. In terms of risk-adjusted performance, the bot truly shines. With a Sharpe Ratio of 6.88, the bot demonstrates high returns relative to volatility, suggesting consistent results with relatively low risk. This high Sharpe Ratio is especially appealing to long-term traders, as it reflects the bot's ability to produce returns steadily without significant fluctuations. A high Calmar Ratio reinforces the stability of the KAMA bot and showcases its ability to limit downside risk effectively, making it an attractive choice for those focused on capital preservation. The Max Drawdown is exceptionally low at 3.81%, showing that the bot is resilient to market volatility. The bot is highly active, executing 3,638 trades over the period. This high trading frequency means that the bot is designed to capture short-term opportunities in the market. Finally, the profit factor of 1.16 indicates that the bot's gains slightly outweigh its losses. Although not drastically high, this ratio supports the overall profitability of the bot. And there you have it. We've built a complete backtesting system for the adaptive moving average strategy. Oh, and let's see the plot, the equity curve. Looks very good. Now, if you are interested in a fully functional trading bot based on this strategy on Binance, I've developed a fully functional bot based on this very strategy. It's all set up and ready to go. Just plug and play. To get your hands on it, join my Telegram channel. I have shared the link in the description. It will redirect you to Telegram. You will find the Python zipped file in the pinned message. Thank you so much for watching. If you found this video helpful, please give it a thumbs up and subscribe to the channel for more trading strategies and coding tutorials. Don't hesitate to leave a comment if you have any questions or if there's a particular topic you'd like me to cover next.